You started with a dream, now you leading a team. Working it, closing them deals, working with purpose. You don't walk around with a purse, but you working it, walking in heels. Beauty and brains, speaking and fighting for change. Intellectual and clever.
So pretty much house hacking is where you are going to buy a 2-flat, a 3-flat, a 4-unit, and live in one unit and you rent the other units out. So essentially you are living for free. That is the idea of house hacking.
Table, grinding from all different angles. Got you on trips, making money while the bank closed. You stay focused and you tryna get your paper. Independent, never asking for no favor. She got flavor, look at her behavior. They were sleeping on you, now they finna wake up.
I just want you guys to understand your purchasing power that you have as a first-time home buyer or as a home buyer in general.
Bossed up, never lost touch. It's going down. Gotta see you play monopolies for the properties we own now.
Really? For real?
Welcome. Hey ladies, so welcome back to another session of the Flippin and Heels presents Badass Women in Real Estate Virtual Summit. This is our 4th annual, and I'm so excited to have this special guest on here with us today. We are going to talk about getting to the money. Literally, that's what this session is entitled, is getting to the money. Because first and foremost, everybody always wants to get into real estate, but a lot of people get held up by the money. And so I'm so excited that we have a special guest, Mrs. Natasha Robinson. So I'm so excited to have you on. Welcome.
Thanks for having me. Always a pleasure.
Yes. So tell the people a little bit about yourself so they can understand why you are such a badass in this real estate industry.
So as you mentioned, my name is Natasha Robinson. I've been in the mortgage industry for about 20 years. Started closing department, processing department, worked for a top producer, eventually became a top producer myself. I specialize in mastering the guidelines so that way we can be smarter than the underwriter is what I say. And right now I'm actually training a group of other loan officers so that way they too can also be educated so they can assist with building generational wealth in our communities because it is definitely needed.
Yeah, I love it. Yeah. So thanks so much for coming on. So one thing that you are, like you mentioned, you worked for a top producer and then you became a top producer. So what was that process like, and what does it mean to be a top producer? Like, what is that ranking like?
Good question. So pretty much I do about 65 million in volume. That computes last year to about 301 loans. So of course, we're working around the clock every day. My first year I did 11 million and then 26 million and then 32, 43, and then 65. So that just kind of shows you the growth in the industry. But that's a lot of loans for one person. So we have a very strategic system in place that we use to get the loans closed and to get them closed on time. As it relates to working for a top producer, I put in that work. I work for someone many hours a day, so that way she can be a top dog, a top producer. And I work many hours to support her success while learning the ins and outs so that way I can create the same dynamic just in our communities. So the loans that she produced were not community loans. They were more so, loans of people that did not live in the communities. But I was able to learn, how she underwrote the files and how she processed them and how she ran a big team and was able to get through a company as big as my company, being a woman in the industry. So was able to learn a lot, take a lot of notes. And when I felt like I had enough information to be dangerous, then I had the ability to go out there and do it myself with my team.
Good. That's good. That's so good. We always talk about like representation, right? And so, like you said, like the woman that you work for, like she was killing it and she was doing loans, but like you said, the majority of them were not in communities that you served or that you serviced. And I think that's such a huge benefit to you. Like you said, becoming a top producer, and then going ahead and eventually building out a team to service those communities. But your goal was intentionally to provide more loans within your community. So I think that is amazing because we've all heard about just like the stipulations around lending and the barriers that so many people have to cross in terms of getting funding and financing, and you stepping out and saying like, no, my goal is to provide more loans to people in my community. I definitely commend you for that.
First, we have to motivate, then we have to educate, then we teach individuals how to build generational wealth. It's a process, and through that process, it makes more leaders within our community so then they can help do the job of helping others. So it takes a village to make a change.
Absolutely, absolutely. And then the last thing that I want to touch on before I segue into the next topic is building out your team, because like you said, doing 300 transactions a year, 65 million in volume, that's a lot. That's a big undertaking. And so you also mentioned that you're currently training other individuals. And so what does that look like? Because I know our listeners are not only investors, but a lot of them are entrepreneurs, are in the small business phase, and are in that growth phase. And you, as the boss woman that you are, like, I know, this interview series, particularly this session, is about getting to the money, but I know you have gems and tips on being a leader and building out a team.
Yeah, so I have been so blessed. I think that I have created the mastermind system of building wealth. I am actually the number one, probably growing loan officer as a minority in guaranteed rate. And like I said, I'm probably one of the top African American originators in the industry. And what I did was I created a system of how I learned, right? I learned how to be a processor first, then how to be an underwriter. Then I learned how to be a loan officer. Through my system, I teach you those steps. And I have a lot of opportunity because I am, a preferred choice within the industry, within our communities, and I'm licensed in about 37 states. So with that being said, there's so much opportunity, and I have just found a very unique system to make top producers. I have 2 originators that just started with me August of 2020, and they're already holding 16 contracts at a time. Now, when I started in this industry, I worked under someone where it was always a competition. She's always competing with me. Where on my team, it's not a competition. African American homeownership was down by 1%. It's enough business out here for everybody. So when you work on my team, you're working with somebody that wants you to win all day, and I'm going to give you all the secret sauce. So that way we can get on the finish line together. And if you beat me, if your volume is higher than me, then I'm going to be proud that I was able to give you those tools to be that dangerous. So when you're working with somebody like my team and the people that are on my team, everybody has the ability to grow to the best of their potential. You be who you are, who you want to be. And like I said, I'm going to give you all the secret sauce to be successful. And it's up to your work ethic and how you're going to work that number to be successful. So we have a lot of opportunity on our team where you can kind of come in as a junior AVP and kind of learn the ropes and then grow and spread your wings off to being that very own top producer that's doing that 30 million. Because once you do 30 million in our business, you're considered the top 1% originator. It's not that many African-American originators out here that's doing $30 million in production. So if I could teach you how to do that in 2 years, then I feel like I've done my job.
Boom. Love it. I love it. And the other thing that you said at the beginning that was so important was that, your title was loan officer, but you learned how to do everybody else's job plus yours. You learned about processing, you learned about underwriting, and in addition to being a loan officer. So I think that was one of the biggest gems there for anybody in any industry is, yes, your job is important, but there's a lot of components that affect your job, before you can do your job or even after you do your job, all the way through the process of getting paid until that loan closes. So I think being able to understand how each function works and navigate, you're able to successfully navigate it to make sure those deals get through to the closing line. I think that's such a huge gem in itself.
Yeah,
Cool.
I always tell my clients, you can call me the janitor as long as you pay me like the president. A lot of times within our community, we're so caught up on titles and ego that we can't focus on the bigger picture. So when I worked under my boss, even though I was bringing in the value, I didn't care about the title and the ego. All I
Hmm.
cared was the education. So that way, once I moved on, I back.
Nice, nice. Okay, cool. All right, so we are going to transition into. So we talked a little bit about the business and you being a boss woman, badass in this business. But in regards to consumers, right? So get into the money. That is obviously where like we can start with, like you said, building and creating that generational wealth. We are we have access to leverage loans, lenders, mortgage companies like yourself. And so individuals that are looking to come and get qualified for a loan, we aren't going to even just touch on like the 203K process yet, but individuals that are just coming looking, they want to buy a house or they want to buy an investment property. What is that basic process like?
So they will pretty much complete a loan application. We have you complete a loan application online if that works for you. It takes about 10 minutes. We just want to know where you live, where you work, how much money you earn. What we generally do is we'll email you the link, or you can always go, find us on Instagram. I work also with my coworker who's also a top dog, Nina Gonzalez. So you can go on Loans by Natasha or Loans by Nina on Instagram, and then you'll find the link, or we can email it to you. And then we pretty much collect your basic documents. Like I said, we pre-underwrite your file. We do not need tax returns if you are not self-employed. We only need 2 years W-2s, 2 recent pay stubs, 1 bank statement. We are reviewing those bank statements. The underwriters do frown upon insufficient funds. So we review all those documents to make sure that we prepare you for your journey prior to getting pre-approved. And then once we get you pre-approved, then they'll be able to shop with you, Rashana, and find that property so that way they can become a homeowner.
Mm-hmm. Yep. What are some of the biggest holdups that you see in individuals not being able to get approved, qualify for a property?
Hold on, let me get my list. No, just so the biggest thing, honestly, is, a lot of clients, they want to go out and find a house. They don't have the money. And then they think like, oh, well, when I find a house, then I'll figure out where I'm going to get the money from. That's the biggest problem. So we've tightened up our pre-approval process, and people don't like it, but they love it when they close their loan in 3 weeks after contract. So we need to know where you're getting that money from. If you're getting a gift from an immediate family member, the underwriter will require a copy of their bank statements if it's a government loan. And if they have moving deposits, now it just becomes a problem. So we request those documents in the beginning so that way, if we see something like that, we can prepare you before you find the house and not where you're in the house. So that's the number one thing. Number two, the changes in credit. Like people will stop paying their current rent, or they will stop paying current bills and things like that. And they do updated credit checks throughout the process, or they want to go buy all the furniture before they close. Never buy anything or change anything with your credit when you're going through the loan process.
Girl, say that
So that's
again.
pretty much. You said what?
I said, say that again.
That's the biggest problem through my clients. If you lose your job from COVID, we're gonna find out. So just tell us. Your loan officer is your friend. You want to be open and honest with your loan officer, because the way the underwriting is set up now, we will find out. And it's just like going to court. I tell all my clients that I'm presenting your case to the judge, and I don't want them to assume anything. So I'm going to explain everything that I think is a problem on your file, so I can tell my story first before they think of a different story that's going to cause a problem. So if you're honest with your loan officer, then we can set the tone of how we want to present your case to the underwriter, so that way your file goes through the system smoothly. But when they start finding bits and pieces from documents, now we got to keep changing the story, where now our case isn't as strong as it would have been had we presented it correct the first time.
Good. All good stuff, man. Like, yeah, no lies told, right? Like, so by me being a realtor and being on the other side after, clients get approved or don't get approved, Latasha is absolutely right. Now, let me ask you this. Because folks, like, some people don't understand like DTI, debt to income, how pre-approvals are calculated, and then why should they not go and, like you said, finance, furniture or buy a new car and things like that. Can you touch on that for a little bit and how that factors into, the approval limit?
Income ratio is something that you'll hear all the time in our industry. And the way I explain it is like this. If you make $1,000 a month, your debt to income ratio, and it changes depending on the program. Generally, you want to be about 50%, right? Sometimes we can go higher. Sometimes we're forced to go a little lower. What that means is that of your salary, if you made $1,000 a month, your monthly mortgage and your minimum credit card balances cannot exceed the $500, the 50%. So you want to be at 50% on the max. 45 is a better range. But like I said, if you're approved, you're approved. So what that means is that when you go out, if you are at the max, what you qualify for, and then you buy a car, now I have to add that car note. So now your DCI may go from 50 to 60. And now you no longer qualify in the house in the middle of your transaction when you've already told your family you were getting this home, you've already paid your earnest money, and you've already put your time and sweat into it. So you don't want to make any changes to your credit. And if you have an emergency situation, like I had somebody that had a car accident, car was free and clear, they had to get a car, you just want to run it by your loan officer first to make sure it's going to work for you. So that way we can talk about it together to see what the best decision will be for your loan purchase.
Right.
Everybody's not tight on DCI, but some people are. So everybody's situation is different.
Good stuff. Cool. All right, so let's go ahead and transition over into FHA 203K. So, so Natasha did not mention, but she is a beast in the 203K. We know she is a top producer, but let's touch on that, and let's touch on I guess even like what a 203K is. First of all, we can start there. But then also how you basically transition into really being niched into, that category of loans.
So I always had a desire for construction. So when I got into this industry, I bought a building because my dad lost our family building to Texas when I was younger. So I always desired, I wanted to come and get his building back when I was old enough and had a job and things like that, right? Because we were the only people in the hood where we were like owners of our property and everybody else was renting. So our building was like the play zone. So I have a lot of great memories from, as a kid. So I purchased a building that was a multi-unit and I ran out of money on a rehab. So with that being said, I interviewed because I needed money just to pay. I was younger, just got out of college, was not ready to go to work. I just wanted to, live my best life for a good year before things got started because I had been working since I was about 14. So I interviewed with a mortgage company and that's how I got into the mortgage industry. So construction is where it's always been. So I bought that building. I did a rehab. I later bought an 8-unit. I did a rehab. And, I just gravitated to the passion of rehab. So when I started working for my mortgage company, they couldn't do rehab. So I had a client, he wanted to do it. I asked him, would he be my guinea pig? And I was able to just learn the process from scratch with the account executive. So my first few renovation loans were the only renovation loans to ever close in the company. So then as it went on, my boss that I work for, she just coincidentally happened to do rehab loans. So I was able to learn the ins and out of it. And I see how many people fail with renovation loans. I see how many problems there are. So I wanted to go in something where I could be an advocate and I can educate, because if we did renovation loans, we could be so much more successful because we can gain equity. It just excites me, right? So I wanted to be the educator on that. So I've created a system for renovation loans where we actually can close them in 37 days. If you listen, a lot of clients don't want to listen. The hardest part of a renovation loan is finding a contractor. And 98% of the time, it should not be one of your family members or friends because this is business, right? So with that being said, we have created a system on renovation where they can go through. And I've had a lot of clients that are super successful and they've gained a lot of equity through the renovation loans, and it put them in a really, really, really good financial situation. And not going into preaching, guys, but when we get into good financial situations, like my properties, I was only making $30,000 a year, but my properties pay all my bills. So I would have never been able to quit my job and go to the next level if I didn't have that internal confidence and that financial support from my properties to be able to get to that next level. So renovation loans do that. You can get into a 4-unit, you can rehab it, make it beautiful, live there for a year, come back and buy another property and keep it going. But renovation loans, you can be a investor in an owner-occupied life, spending little money down and practicing and build something that can become super successful, and they can start doing as many rehabs like you, Rashana, yourself. But they are able to learn owner-occupied with very little money down, which is the best and the easiest and most affordable way to learn.
Now, what are some of the common mistakes that you see people make in terms of, when they want to do a renovation loan?
The biggest mistake is the concept of time. If you don't have time to meet with the contractors, don't do a renovation loan. You need to have time. You need to be able to go to the property. You need to have patience. You need to put that foot in the door. If you're going to do a renovation loan, you should already be on the phone with 7 contractors that you can interview, somebody that will refer you these people, so that way you can call them and say, hey, John didn't call me back. The contractors are busy and they're contractors. So at the end of the day, you want to make sure that you have a contractor that you can depend on, which takes a lot of time to get to that point. So do your research, interview them, go check on jobs, make sure they're recent jobs, call their references, put that due diligence in. If you put in that work on finding a great contractor, you already found the best loan officer ever, then your job is done pretty much at that point, right? And then the other biggest challenge is that you having a conception of how much things really cost. Like I got my basement done just recently, and I thought it was going to be like $8,000. It was like $30,000. So the average gut, and Rashana, you can comment on that because it's more in your world. But you're spending $40,000 to $50,000 a unit just on the inside of the property, where people think, oh, I'm about to rehab this 4-unit for $80,000. No, you're not. It's probably gonna cost $230,000, $260,000. But if you have a good concept of how much things cost, then that's very helpful as well, because then you can bid your purchase price correctly because you have a good understanding of how much the rehab is really going to cost. So once your numbers are right and you have a good contractor, I can close your loan in my sleep. Like, that's the hardest part. So if you can master that, you can do a renovation loan with success. And try to have a few friends that, they have Facebook groups and all the type of stuff, but you want to be talking to people that's talking renovation, because you'll get some type of valuable information that'll be helpful, help you on your journey for success.
Absolutely. I agree with everything that Natasha just said. I feel like for me, the number one question that I get around like renovation loans and contractors is like the contractor piece. How do I find good contractors and things like that? And I always say recommendations and referrals, recommendations and referrals, recommendations and referrals. Like somebody that you just Google and they, have a couple of nice reviews. Like, okay, that's all right. But you definitely want recommendations and referrals from people who have actually worked with people before. And then, like Natasha said, the other thing is the Facebook groups. Facebook groups have become basically like your modern day meetup, right? So because of COVID, like a lot of things are virtual nowadays, and a lot of networking and business is done through just online networking, and you can find contractors. And like she said, if you even consider doing a renovation loan, you should start reaching out to try and find those contacts now. And like you said, just asking family, friends, anybody who might have an inch of renovations, or like you said, maybe they renovated their bathroom or their kitchen or anything. Like Natasha also said, going and checking on actual job sites, right? A good contractor is always working. So you should be able to go and check on the current job that they have going on. And the list goes on. So much good information there. Is there anything else, any other tips that you want to give about just the renovation process, or the 203K, or the misconception? I think one thing that you also mentioned was time. It's so funny. I had a client who wanted to do a 203K loan, and then he was like, "Yeah, I'm about to move out of state for like 2 months. Is it really that much, my involvement?" And I was like, "Yeah, if you want to make sure your project is done right." So I don't know where that even came from. Like you said, the misconception of time that you don't have to be involved in a whole renovation process. But then also too, do you recommend like for that a lot of first time home buyers do renovations or like the 2 or 3K, or do you recommend like they have some sort of experience first?
Once again, it depends on the client. I feel like if you're a first time home buyer, you really should be working with somebody like Rashana. And I'm not just saying that because we're on the call, but she does a lot of renovations. So you work with an agent that has never done renovation before, and you kind of and you're a new home buyer as well, and you
The
kind of put
blind leading the
yourself at a disadvantage.
blind.
Right. You put yourself as a disadvantage. So if that's something you really want to do, you don't need to be learning with your agent. And I know we all, friend or family or whatever the situation is, but those little quarters that you just made that agent just because she was your friend with no experience may not have cost you thousands of dollars, because the whole purpose of using that realtor with that experience is so that way they can share that experience onto you. That's just like I'm an originator who does renovations. When you're talking to me, you're talking to somebody who is just leaving a city inspection right now with the city. You're talking to somebody who is living and seeing it every day. So the education and the conversation are just going to be a little more stimulating than they would be if you have working with someone that has no clue. So if you're new to this industry, you really need to have a team of professionals that have that experience so they can share that experience with you along your journey. And I feel like that, will be very helpful. But most important too, no matter how much experience you have, you need time. You need time, and you need the ability to be able to go and meet with those contractors and do that due diligence to make sure your job is successful. You are your own project manager in this particular situation, so you have to act as one and do the job that it takes to get the job done.
Got it. Cool. All righty. So, and then the last thing that I want to touch on, in regards to getting to the money and renovation loans and just individuals in general, in terms of financing. So, a lot of people ask in terms of their next purchase, right? Getting set up for that next purchase. What does that look like? How far out, do they have to wait? Can you touch on that a little bit? Because in the beginning, we talked about generational wealth building through real estate investing and ownership. So if done right, like to leveraging like the FHA loan or conventional or 203K, it can be used to leverage, opportunities and ways to get to your next property. So what do you see that process usually like? And then even if you can give an example of like a real life client, a repeat client of yours who's doing this or has done this.
So generally, you have to live in a property for 1 year after the renovation. So on a regular FHA purchase with no renovation, then it's just 1 year. But if it takes you 6 months to complete the project, then you have to live in the property 1 year after that. Like I said, I can, like I was saying in my story, but with my clients, I have a few clients that will purchase, they live in it for a year, and they'll buy that 3 to 4 unit. And then when you go down in units, that's considered an upgrade, right? Because when you go to your next property, it has to be bigger or better. It has to make sense, right? Because they want to make sure that it's really owner occupied. And you can only have one government loan at a time. So if you're going to keep these properties, then with the first loan, we come in as FHA, so you can put 3.5% down. But then when you come into your second property, it's generally a 2 unit. And then with that 2 unit, we can do a conventional loan program with 5% down to that property. So we've had a lot of success. A lot of clients do that. We also have had clients that would buy the 3 to 4 unit. My little brother, he lives in the property for 2 years, and then he'll sell it off, and then he'll do it again every 2 years for the capital gain situation. So he was able to sell his building, and make over $50,000. And now he purchased his new building, and he's gonna live there for a couple of years, and then he'll probably sell that one as well. So every investor is different. Some people want to buy property to generate income so that way they can offset their expenses. Some people want to buy property and live in it long enough so they make enough money to sell it and move on to the next property. If you do sell the property, you can't continue to get FHA loans over and over again. You just can only have one at a time. But you can have as many as you want in your lifetime. You can just only hold one at a time.
So the example that you use is like going from FHA to conventional. Does it matter which one you do first? Is there a benefit? Like, what if you go purchase conventional first and then use FHA, or is one one more than the other?
It doesn't matter, but when you are house hacking, I'm a house hacker. So when you are house hacking, you don't go up in units, right? So if you're gonna start, you're gonna start with the 3 to 4 unit, and 3 to 4 units conventionally, most of the time, based on income limits, are 25% down. We do have some unique programs that will allow a 5 to 10%, but based on the income restrictions for 3 to 4 units at the amount that they are today, you're generally going to want to go with FHA on that 3 to 4 to save you that 25% down, where we can come in the door on the second property and take advantage of down payment assistance and things like that on that second property and do a 5% down conventional. Because on our IDA program, which is a down payment assistance program, which allows you to make up to $106,000, and they give you a grant, but most important, they allow you to purchase a 2 unit with only 5% down and a lower credit score. So like I said, we manipulate the programs to get you in, and they do allow the grant if it's not a first-time home buyer as well. So we generally teach or coach our clients to go 3 to 4 unit FHA and then come back conventional. But to answer your question, if you did the conventional first, it's okay. We can do the next property as FHA. It just has to be an improvement. The new property has to be an improvement to the current property that you already have.
Gotcha. Okay, that makes sense. Man, that's so good. So much good information. So we covered a lot in this short amount of time in regards to you climbing up the industry and becoming a top producing loan officer, as well as building others up to do that as well. And then in regards to just the original loan process, the original things that you need, like the basics in terms of getting approved, and then the renovation piece, which is huge. Like you said, it's a great tool for building wealth, building equity. And I think it's great that you have that passion for renovation, as do I. And so, like you said, we're able to help encourage and push and support more of our clients into home ownership through that route, because it is a lot of support that is needed when you're doing a renovation loan. So no, good stuff. So how can people find you, follow you, connect with you, support what you have going on? Apply for a mortgage.
So like I said, I'm on Instagram, Loans by Natasha. My team number is Loans by Nina. And then you can also reach me at 773-459-6811. And we look forward to working with you.
Oh, is there anything else, any closing words to just anybody that's looking to get into home ownership, building generational wealth, going that route, or anybody that's possibly looking to become a top producing loan officer?
Yes, if you're thinking about purchasing a property, you want to get your credit right, because that's the first step. So make sure you handle all business as it relates to your credit, and as it relates to just real estate in general. Make sure you're talking to people who do real estate. A lot of times you want to call your uncle and cousin. They don't own any property, and they've already talked you out of it. So make sure you're having conversations with positive people that's telling you what you can do, and that's telling you what you can't do. And just keep pushing, because I've never met anybody who worked hard every day and wasn't successful. So whatever you want to do, if you put a plan together and you work towards it and you put yourself around professionals, you will be successful.
Good stuff. Okay. Well, thanks so much, Miss Natasha, for coming on and sharing the information in regards to everything that's needed in terms of specifically renovation loans and building wealth through that way. So we so appreciate you for coming on, and make sure you guys reach out to Natasha for all of your lending needs. Clearly, she knows exactly what she is talking about. Top producing loan officer, as well as she's been doing this, like she said in the beginning, for 20 years, and she ain't stopping anytime soon. So I appreciate you for coming on.
No worries. Thanks for having me. Always a pleasure, Miss Scott.
All right, thank you. Bye bye.
All right. Have a good day.